We're seeing futures in the red right now following the S&P closing down 0.5% yesterday, breaking a weeks-long rally in the markets. How do you see the market shaping up today? What's your WEX word of the day?
My WEX word of the day is pitch, and it's such a variable word, but I mean pitch in aviation. There are three axes for aviation. You have roll, you have yaw left to right, and pitch is the nodding up and down of the nose of the airplane. And I'm a little concerned we're going to be nodding down, and this isn't a great pitch right now of the markets because that's what everybody's trying to figure out. Are we going to continue to nod up or nod down? So I think the pitch is a little at risk today for a nod down.
All right, so you think the pitch is a little bit at risk. Give us a sense. What's creating this risk? We were talking earlier today about some investors maybe thinking that their confidence that the Fed was definitely going to cut rates has been shaken a little bit right now. What are you looking at when it comes to the markets? I know you're looking at the JOLTS coming out later today.
Yeah.
What do you think that's going to tell you?
It should be continue to go down, right? We need to see JOLTS continue to go down. We need to see labor force continue to shrink and get pressure because that's the hope. You're pricing in now. March, the cuts keep getting brought further and further forward in 2024, and that's what I think is putting people at pause. How aggressive is this rate cutting going to be next year? And I think a little bit too much is getting priced in right now, which means this rally may have gone a little too far. So if you don't see JOLTS continue to contract and you see employment continuing to remain strong, why is the Fed going to cut in March? And I think investors need to step back and really ask that. Why is the Fed going to be cutting? They're only going to cut if employment's come under pressure or we see inflation get to the point we're in a deflationary environment and they really need to look to stimulate. They're not going to stimulate just to support the stock market. They really don't care what the stock market's doing unless there's a liquidity crisis.
You know, Joe's coming out not too long after the opening bell, about a half an hour after the opening bell. So you mentioned that we need to see continued decline. The estimate for this month, 9.4 million. Last month's actual was 9.6 million. So is it simply that same level of decline that we need to see, or does it need to be even deeper?
I think you're going to need deeper. We're seeing this still. The labor market has to continue to tighten, and it's hard for it to tighten if you have 9.3 million job openings and you almost have a 2-to-1 ratio of jobs per person looking for jobs. Without the labor market tightening, without unemployment coming up, I don't see the pressure on the Fed to do these aggressive cuts that are priced in. And if suddenly we don't get some of these March, April, May cuts next year, you're going to see a little bit of repricing in the markets. And I think we just ran a little too far, too fast. Everybody got excited about Fed rate cuts next year. And now we maybe have moved to the point we're a little aggressive on what we're thinking they're going to do to ease and support this market.
I want to turn back to the pre-market for a second. Look at the NASDAQ futures, down 0.5%, the hardest hit of all three indices. You're looking ahead to earnings later today, MongoDB, part of that big AI trade. What do you expect from this report, and how influential do you think it's going to be, not only to NASDAQ, but just to tech in general?
Yeah, and it's been interesting, right? The mega caps kind of rolling off this week and not being able to be market leadership and the broad market rallying. MongoDB, I'm looking for a beat. They've beat on adjusted EPS 12 out of 12 quarters. A beat is something that isn't going to satisfy the market. It's got to be a beat and a raise. You see that with these high-priced tech stocks. It's not just about what you did for me last quarter. It's so much more about what are you going to do for me going forward to justify the multiples you're trading at. We did see Datadog do well, so I am bullish. I think they're going to beat 500,000 plus on earnings. EPS at 51 cents. Those are a little bit of a low bar considering what they did last quarter. As long as they've seen continued sales growth, then they should be good. But again, it's going to be what that outlook looks like that moves the stock.